Okay. Mr. Vijay Chhibber also joining us now. He's a former chairman at the NHAI. Mr. Chhibber, thanks so much for being with us. So lots of, concerns around the NHAI which have been flagged, raised in fact about Indian debt being 4 times for the NHAI versus what it was about 4 years back. Nitin Gadkari recently also said, we plan to reorganize the NHAI and relook at financing models, including raising of 85,000 crores through road asset monetization. What's your view on that? How doable or achievable do you think that is?
Well, thank you for having me on your show. At the outset, I must reiterate that this letter which has been from the PMO, which seems to have stirred up this debate, this letter only conveys certain suggestions received by the PMO from somebody or from some agency. It is not the views of the PMO. It's important to say this because the views conveyed or the suggestions conveyed obviously have been drafted by somebody who has somewhat limited knowledge of how the system works within the government framework. And really it contains suggestions which are a bit outlandish, like NHAI to stop constructing roads. I mean, NHAI is an authority which has been created by Parliament only to create roads. And if you say that the NHAI should stop constructing roads, I don't know what you really have in mind. But coming back to the road sector, in fact, if I may say, the roads and the railways have been 2 areas and 2 infrastructure verticals where the government and the Prime Minister personally has been committed from day one, from 2014 onwards. And it's only with this major political backing that these 2 sectors have really been the fulcrum of the developmental agenda of the Modi government. And I don't see this changing in any measure going forward. In fact, if anything, it will be stepped up further as the need for reviving the economy and reviving the growth of the economy gets enhanced. The last point in this series of suggestions contained in this letter, or the annexure to the letter, relates to monetization of road assets, and I think this is one area where the ministry needs to sort of pull up its bootstraps. This was started in 2014-15 as an idea, and we had finished the legal framework for the methodology of monetization. It's really been 4 years and only one tranche of about 9,000 plus crores which has been achieved so far. And I think the ministry is sitting on about, or the NHAI is sitting on about 150 completed road projects which can easily be monetized. Private sector, on the other hand, has shown considerable efficiency in monetizing assets which are with the private sector. In fact, just last week I was engaged with one of the builders, and they have been able to sell 5 road projects which are in fact under construction, and the first of which will be completed only 12 months from now, and at an upside of about 40%. So the point I'm making is selling of or monetization of road assets in fact is very doable, and it's a pity that government has been somewhat slow. But from what I hear from the minister's remark and from the remarks of the NHAI chairman, I think there is a grand design which is now evolving, and I'm sure that they will spread this out very quickly. I just have a word of caution when we monetize assets. It's not like building roads that you can compress them. Monetizing any asset should be done in a very structured, in a very calibrated manner. Such projects which are being monetized should be informed to the market well in time, and the market should be given adequate time to do their due diligence so that the government can get its full value. If you try and compress it too much, the knowledge base with the investors becomes limited, and to hedge their risks, they will offer you a premium which is less than what you could possibly get should you have given them adequate time. So I believe that the second point I must mention is in respect of monetizing infrastructure projects, we are not looking at domestic capital. This is essentially, the buyers are essentially pension funds from outside India. They are flush with funds. So let's not mix up the lack of liquidity in the domestic market with the monetization of infrastructure projects, particularly in the road sector. So I believe there is adequate funds chasing few projects. projects should be brought in a structured manner, and I believe that there should be no difficulty in mopping up resources, as has been indicated by the chairman, as also the minister recently. There are other aspects which impact the road sector. If there is a general slowdown in the economy, I'm sure this will also impact the road sector. For example, we have a 2% CSR.
Right, I'm just going to come to that point. I just going to mark some stocks here, just because suddenly there is a surge in REC, PFC, NTPC. So, pardon me for this mini divergence. Got to just mark for the benefit of our viewers that there is certain surge in some of the PSU stocks right now. Okay, now you mentioned that there are challenges in the power, in the road sector. But frankly, as an observer, if I look at what NHAI did between 2014 versus 2018, and if I map what the progress has been between 2018 and 2019, last 18 months, last 24 months, there is a slackness and there is a slowdown. Things started off very well. The land acquisition was easy, roads were getting awarded, the hybrid HAM projects had kicked off, BOT had taken a back seat, but suddenly the push, that is missing.
There was a period in between where the financial close of a lot of these projects was becoming a challenge. I think we have crossed that hump. Major public sector banks, including SBI, have now come on board. The HAM project, the HAM framework in particular, is tailor-made for the banks, and I see no difficulty for the banks to really now support this initiative. So I in fact, the other point that they made was that each project should be a financially assessed project. Now, in fact, it is financially assessed. In fact, the decision on the mode of construction actually it comes out of the financial assessment of each and every project. So it's not that decisions are taken to identify a project for BOT or HAM or EPC in a vacuum. In fact, this decision is taken really on the analysis and the financial analysis of each project. So I would say that the framework is very robust. There have been issues of fund flow to NHAI, which is a function of the diversion of cess money to other sectors of the government. But I think this gap can be made up through higher borrowings. And I must also emphasize that higher borrowings by NHAI, which you also alluded to, this is something which is not decided within NHAI alone. This is something which NHAI suggests, and the ministry accepts it and recommends it to the finance ministry, and the finance ministry finally gives a envelope within which borrowings can be done. And this envelope again finds a mention in the budget. So NHAI's borrowings are very much part of government's overall borrowing framework for the year. And it's only when the government is unable to push in liquidity from other sources that the borrowings are enhanced. So this mention that NHAI's borrowings are increasing for the last 4 years, this is a function of government's inability to fund it from alternative means. But it is very much part of government's overall borrowing envelope. And I see no difficulty in sustaining this. In fact, there was a comment by some, I would say, not so well informed sources that contingent liabilities are also there of a magnitude of 3 lakh crores, etc. And I'm so happy that the chairman NHAI has already responded to that by saying that all liabilities, including contingent liabilities, have been fully accounted for, and that the finances of NHAI are well under control. I see no difficulty in sustaining this program in terms of the award of projects, in terms of completion of projects, and I also see no dilution in government's political will to back up the basic thrust in infrastructure, which is primarily road, railways, etc. So I really find this as not the issue. There is an overall slowdown in the economy, and which is what the point I was coming to, that I think there are other features in the overall financial management of the country that needs to be looked at. Liquidity needs to be enhanced. Interest rates can be brought down further. There is a substantial scope for further reduction in interest rates. There is a the SLRs can be enhanced so that more liquidity is available with the banks to fund. And
Mr.
banks can be,
Chhibber, I'm afraid I'll have to leave it there. We've gone a little over time, but it was good chatting with you. Thanks for joining us this morning.